Well, I wasn't planning on making another video tonight, but then I got an interesting message from my buddy Boyo, Dan Weston, and he cued me into a very interesting happening circumstance, dare we say, pump and dump that took place with a certain stock that was shilled by a bunch of ex-FinFluencers. Now, I'm not super into the grifter slaying space anymore. I'm retired partially from that, but I couldn't resist covering the story because, as you all know, if you watch my channel, unless you have an IQ that's below 70, FinFluencers exist to pump stocks to enrich themselves. They don't do any fundamental analysis. They find trending tickers and they always become bullish on those stocks. So in this episode, we're going to follow, I don't know, I'm speaking like crap today. We're going to follow the saga of Oscar Health, a stock that was in the 20s and then plummeted after a massive earnings guide miss. And it was pumped by a bunch of very interesting FinFluencers. And there were some people on X that actually put this all together and show you exactly what happened with this company and why you should not listen to FinFluencers because they are a bunch of incompetent clowns, except for me. So Oscar Health, what is it? What are we talking about? Here's the company here, Oscar Health Incorporated, ticker symbol OSCR. What does it do? It operates as a healthcare technology company in the United States. It offers health plans to individuals, families, employees, and small groups. And it provides a plus Oscar platform that powers others through the healthcare system. So that's the company. It's some kind of health insurance, health plan offering company. So we see the stock is up 7% on the day. So, it's rallied a little bit. Over the past 5 days, it's down 1.47%. And over the past month, it's down 30%. Now, do you want to guess when this stock was pumped by the FinFluencers? Let's go look at the year-to-date chart. Do you want to guess when this stock caught the attention of FinFluencers? If you guess right around the all-time highs, you'd be correct. Stock go up. Ticker trending. I talk about trend. I be happy and excited and positive and bullish because that's what people want me to hear. I get lots of subscribers and ad revenue. People worship me. That's kind of how it works on the griftosphere. Okay, so let's go check out what happened with this company. And then we're going to go look at all these different posts of all these different amazing FinFluencers who are all clowns. They are all clowns. We're going to look at a bunch of posts that were aggregated together, and I'm going to show you what a bunch of morons they were. So we had this interesting post from Wasteland Capital, somebody on X. Let's make sure we're sharing. Yes, we are. Oscar with a massive profit warning. 250 earnings before interest and taxes of negative 250 million guide versus 264 million consensus. So the original consensus for this company's earnings before interest and taxes, which is a clown metric, oh, by the way, actually moved by over $500 million. So the consensus estimate of this company's future earnings for all of 2025 was off by $500 million. And when you go from the market projecting 264 million of profit all the way down to negative 250 million of loss, you're going to see a large decrease in the share price of the company. Stock down 50% since a coordinated pump a few weeks ago. Now, Wasteland, I actually want to disagree with you on this one. It was not a coordinated pump. It was not coordinated. It's the nature of the beast. When a ticker becomes popular and it goes up a lot, the FinFluencers will talk about it and they will always shill it. In 99 out of 100 circumstances, they will always shill it because that's what the people want to hear, and that's how they get followers and ad revenue. Professionals predicted this was coming. Retail was delusionally clueless. The golden age of pump and dump. That is a very true statement. So we see some financial data here. We could look at the numbers. So the Oscar Health Incorporated 2025 financial guidance summary. And I'm sorry if you can't see this. I don't really know if I can zoom in that much. Total revenue, they actually increased their, the full outlook is between 12 million to 12.2 million. Medical loss ratio, not quite sure what that is, 86 to 87. Loss from operations, a guide of full year loss from operations of a low of $300,000 to a high of $200,000, negative $200,000. So this company is guiding for a loss. Oh, that's $200 million. Excuse me. Oh my God. So this company, instead of printing massive profits, which these FinFluencers should have known, they are the next generation of stock analysts. And it makes you wonder, is the past generation any better? Probably not. But these amazing geniuses who totally are not latching themselves onto popular tickers and becoming the leaders of the cult of those tickers, they totally understood this company to such a detail, to such an extreme, that they felt comfortable promoting it to their fans. But don't worry, you can always delete your tweets. Okay, it's perfectly fine. And honestly, like, if you follow these people, unironically, I'm not even mad about it. It's just like, you're an idiot. So we got Heisenberg here. So I've seen this guy on X. He just seems like a trading clown to me. I don't know who it is. It seems like an anonymous account. His name is Mr. Derivatives. That's his handle. Mr. Derivatives. That sounds like gambling. OMG. OMG. Oscar plus 12% overnight. Oh, that's more money than VT makes in 20 years. We did it, fam. What did you do? So, of course, he's got a Robinhood snapshot of the stonk going up 16.68% overnight. He's a genius. Subscribe, follow him, buy his trading alerts if he has them. I don't know what he does. Wow. Okay, so I recognize this clown. And then we got Shea Boulor. Shea Boulor. Holy Oscar. Holy smokers. That ain't no jokers. Stock go up. Talk about it. Be positive. Mike Investing. I've never heard of this clown before. The breakout on Oscar is still in its beginning stages. It's just getting started. Every time a stock goes vertical, they all say the same thing. It's just getting started. And if they're wrong, they delete the posts. If they're right, they keep posting about it and they follow the momentum and they become retail heroes. Despite the recent 40% surge in the past 6 months, Oscar still has room to rally to $70 plus this year. Oscar has EPS of 610% for this year, $1 billion plus in cash, and 56 year-over-year growth. So he's just citing metrics. 32 plus incoming very soon. Mark my words. Okay, so he has this stupid little chart here. You know, he's drawing some lines, and then he draws some more lines. Wow, good job, Mike. And then we got Bourbon Capital. Mr. Boozy Booze here. Merry Christmas, everyone. Oscar is up 16% overnight, $20. Wow. And then we get to there's more hilarious people here. Antonio Linarez. So I've seen this clown start to pop up. He's got a YouTube channel. And what was he shilling? I know he was shilling AMD. I know that for a fact. And he's basically like every other FinFluencer clown that loves to shill retail stocks. And I think he shilled HIMS. I could be wrong. But Antonio Linarez is the Aryan-looking dude on the right side of the thumbnail. He kind of looks kind of like you know what I mean? Hey, and maybe he is, but and he always has these like insane predictions of future profits. So Antonio Linarez, cha-cha-cha. Oscar has 20x upside, 20x upside. So he's saying this is going to be a $400 stock on valuation multiple expansion alone. Everybody in the U.S. market we're all multiple men nowadays, okay? It's all about the multiple, brah. Just slap on a big, fat, wet multiple, and you're a genius. So, of course, here's Antonio shilling it. Loser. I've also seen this dude, Oga's capitalist. You really are a capitalist. You are very capitalist. You know how to make profits off of social media. I may buy more Oscar soon. Despite the recent 40% surge in the last 6 months, it's just up 4% in the last 12 months. Well, if it's only up 4%, that's a small number and that should be a bigger number. So it's going to keep going up. Still 58. Okay, so here's his justifications. Still 58% lower than the IPO price. That's irrelevant. Okay, just because something IPO'd at a certain price doesn't mean it's going to go back to that price. In what world do you live in? That doesn't make sense. That's not how that works. If a company IPOs and then it crashes and then it goes bankrupt, it's going to zero. Remember Tattooed Chef? I forgot who pumped that stock, but apparently he's a genius now. Earnings will grow 600% this year. Wrong. You're just making up numbers. You read an article and you put that on there. Trading at 9 times 2027 earnings. Maybe that should have been an indicator that maybe something's not right. We are still very, very early. Okay. And of course, he pulls up the lifetime chart of the stock. It's down 39%. It's below the IPO price. Therefore, it must eventually go above the IPO price because, yeah. Oh, look who it is. But strong man. But strong man. Amit Kukrija liked Palantir when it was $6, $7. Therefore, he is a genius. He totally did not jump on the Palantir bandwagon because it got him a lot of YouTube views. That was totally not the reason. Him and his bussy buddy, Tom Nash. Amit Kukrija is just a normal guy, just having a good time and getting rich like all the other retail investors. He knows what he's doing. He interviewed Vlad Tenev. Not because he sucked him off and he's a shill for Robinhood. No. It's because he's really a good, intelligent investor that actually knows what he's doing. I mean, he gambled with his mom's money with Robinhood call options. That's what you should do with your parents' money. Gamble on call options. My parents almost disowned me because I didn't tell them to buy call options on Robinhood stock. I'm actually a terrible son. I'm hanging my head in shame. It's not going to get through. He's got a lot of money. I mean, does he ever show his portfolio? I don't think he does. I show mine, but I get made fun of. Retail is getting smarter. See, that's the narrative. The narrative is that retail has cracked the code. Retail are the true geniuses nowadays. That cannot be further from the truth. Retail is a bunch of morons. Wall Street hedge funds are laughing at retail. They're laughing at you because they're making a fortune off you. Reverse Robinhood effect is real. The more you get into Robinhood and trading and listening to this fluffer of Vlad Tenev, the more you're going to lose money. Okay? I wonder if he deleted this tweet. But it really doesn't matter. Like, you can be wrong. It doesn't matter. It does not matter anymore. Retail is getting smarter. We're all geniuses now. More sophisticated. Yes, more sophisticated. You guys, he's fluffing you. He fluffs Vlad, he fluffs Alex Karp, and he fluffs his fan base. And navigating the financial markets by identifying asymmetric opportunities that are deeply undervalued. There has never been a better time to be a retail investor. That statement should horrify you. If people unironically think it's never been a better time to be a retail investor, that should horrify you. This is probably the worst time to be a retail investor. When retail is euphoric and all in the market, that generally means we are in bad or potentially dangerous times. That's just my humble opinion. That's just what I think. Okay, maybe I'm wrong. Maybe retail has cracked the code by doing stock analysis on Robinhood and listening to me, Kevin, Jeremy Lefebvre, Amid, who are the other clowns? Tom Nash, Andre Geek, all the geniuses. They know what's going on. That scares me. That's terrifying to me. Oscar up 12.92%. Okay, yep, here he is. They're all using Robinhood. Look at this. This app, okay, except for this guy. I think he used Google. So I guess out of all these guys, this guy's probably smarter. Doesn't mean he's a genius. And this, I don't know what app this is. If you see a guy like unironically posting Robinhood, like this is their platform, don't trust them. Okay. Robinhood is not a place for real money. It's for clown money. Look at this. Robinhood, Heisenberg, Robinhood, Shea Belore, Robinhood. No. Okay. So there's our hero, Amit Cook. Read ya. Oh. And then we got Milk and Honey Capital. Who is this? Oscar is a $75 to $100 stock. Just say random numbers. Just say random numbers. I couldn't resist doing this. Thank you, Dan, for showing this all to me. This is hilarious. And he's got a little meme with Steven Crowder. Bro, change my mind. Oh, we got more. Stock whale. Cock whale. Red days are coming. Do not miss this. Well, I guess he called it. This is your chance to buy and become a blah, blah, blah. And then we have the patient investor. I've seen this clown on YouTube too. That's what he sounds like. The patient investor? Yeah. He's really good, bro. You're not too late, Oscar. I mean, that's a huge freaking miss, dude. Let's go back to the... Look at that. What did he say? Wasteland Capital. I mean, from a consensus of positive 264 EBIT to negative 250, that's not good. The stock is down 50%. I mean, I hope you put clown money into this. You know, if you put a couple $100, whatever. But you know, there's clowns out there like on Wall Street Bets. And of course, there's selection bias. They probably won't post if they lost money. That put a lot more money into this. And they're following these just dingbats, these absolute dingbats. So I ask you people, like, is he actually smart or is he just spurting out random tickers that are popular? That's an honest, legitimate question. Are these people intelligent? Are they good stock pickers? Or are they riding the coattails of some of the picks they picked that were winners and ignoring the picks that were losers? Do you think it's darts on a dartboard? Or do you think it's actual skill? I'm not quite sure. I have my opinion, maybe. But, you know, maybe you guys can educate me, okay? So, total garbage. This guy's a total clown. Antonio Linarez, I wouldn't trust him. Some of these guys I haven't heard of. Shea Belore and Heisenberg. These are all freaking clowns. Stock Savvy Shea. I love their handles. Mr. Derivatives. Mr. Mike Investing. Bourbon Cap. Yeah, he must have been chugging a lot of bourbon before that. Alk Yourself 2022. Why is it 2022? Is that when he started investing? 2022? Right at the bottom? Amit is investing. He's gambling. Amit is gambling. What a freaking joke. Anyway, let me know your thoughts. That was a funny story. Thank you, Mr. Dan, for pointing that out to me. Let's see. Looks undervalued, to be honest. Can you change the background? I had enough of Nursery Rhymes. Look, I am here because the internet is better. The router is right below me in the garage. In that other room, it's very slow and it's choppy and the image quality isn't as good. I think it's better up here. So we're staying here for a while at least. The beach. And by the way, I'm only responding to member comments, okay? If you want me to respond to your comments, you're going to have to sign up for the membership. I'm not answering random freaking trolls. If you want to troll me, you're going to have to pay me, bussy. It's too simple to invest, and clowns just like to make it complicated and a waste of time trying to beat the market. You know, they're not going to learn until the market really implodes. I mean, we had 2022, but that was kind of a bussy bear market. They're just not going to listen. I've accepted it. It doesn't really make me mad anymore. If you listen, you listen. If you don't, you don't. If you trust these kind of clowns, you're going to get your cheeks clapped, and there's nothing I can do about it. But yeah, I keep it super simple. VT. And if I want to screw around in the future, I'll keep it to a couple $100 or maybe a couple $1,000, and that's it. Because it's screw around money. But you should not be unironically using Robinhood as your primary broker. That is a toxic broker. Every responsible investor buys calls on volatile stocks. I love these troll comments. Oh, but you didn't sign up for my membership. Oh, Amit's so successful. Oh, he's got lots of subscribers. That's all that matters. That's all that matters. I'm convinced it's low IQ. I'm convinced. I am a superior human being to a lot of you people. It's just true. I'm just more intelligent than you. LOL at the Robinhood use observation. You said grifters using Robinhood. So true. Pre-2020, grifters were rare and used E-Trade, Tasty. What's Tasty? I never heard of Tasty. More sophisticated back in the day, larger barrier. Yes, Robinhood democratized nothing. The index fund was the only thing that truly democratized investing. You can invest in the entire world at market cap weights for a 0.06% expense ratio. If you want exposure to the entire US market, it's 0.03%. You can own every stock in the US market for 0.03%. That's democratization of investing. Allowing people to gamble on sports contracts and events is not democratization of investing. It's the liberation of gambling. It's an explosion of gambling. It's not good. But most people will not listen. And that's just what it is. Okay? But yeah, like when I first heard of Robinhood, like my friend, he was like, oh yeah, it's easy to buy stocks, bro. So I downloaded it. I'm like, okay, let me just screw around with this a little bit. So I was like buying random crap. It was so stupid. But I didn't put serious money into it because I'm like, do I really want to risk like my real net worth on this garbage? No. I have my portfolio's at over $600,000 now. Over $600,000. Why would I risk that money and put it into a brokerage that wants to entice me to trade? If you have a bag, if you've already won the game, back up. Don't gamble the money. Why would you gamble? You don't need to gamble. It's a terrible idea. Once you win, tap out. Simple as that. And trust me, when I have a couple $1,000,000, I'm tapping out. Nobody wants to use Fidelity, Webull. I mean, is Webull really a good broker? I mean, I haven't really used it. I like Fidelity. I like Fidelity a lot. Schwab's legitimate. I mean, that's where one of my 401ks is. Pure Robinhood. You said you even use it on your phone to check tickers on the go. And yeah, that's true. I do. I use it to check tickers. That's true. But I'm done using Robinhood for any kind of investing. I'm done with it. It's enticed me to screw around. Like, oh, maybe I'll buy an option, screw around. And it's basically, and I'm a pretty solid like VT shill. Like it's hard to convince me to gamble. And even I got suckered in like, oh, maybe I'll just gamble a little bit. Maybe I'll buy a put on this for fun. And it was just a waste of money. It was just a waste. Robinhood is deadly. It is deadly. And they are getting better and better and better. Why do you think the stock is going up? Because people are trading in a frenzy on that app. If that was a legitimate broker, their profits would not be exploding like they were. It's not a legitimate broker. They make money from order flow and fees and all this nonsense and lending money to people to buy on margin. That's where their profits come from. On margin, you should not be in margin at all. No, never. And they just give it to you like, oh, here's some margin. Yeah, go borrow some money. It's fine. We'll collect our interest and we'll liquidate you when you lose all your money. Whatever. Can we get a nursery rhyme? I wonder if I'll watch me get copyright struck. Twinkle, twinkle, little star, how one, what, up, above the world so high. Imagine singing that to a baby. Why are you crying? Oh, I hear so many nursery rhymes. Coco Melon. Coco Melon. Worried about Amit's family. He invested his parents and sister money into Hood and Palantir. See, that's the danger, okay? Like, you people really don't think long term. I've noticed that it's really a marker of intelligence. I'm not saying you're stupid, but somebody that really can think long term, I think generally has a higher IQ. Like they consider where they're going to be in 20 or 30 years, and they weigh risks and they say, okay, how do I get to where I want to be in 20 or 30 years? Do I get there by gambling on individual stocks that are highly volatile? Sure, maybe I'll get some winners, but I could also make a mistake and destroy my portfolio. It's possible, right? So what's going to happen to Amit, and probably to his family, is the guy thinks he's a genius. He does think he's a good investor. And what he's going to do is he's going to buy something else because he's going to be super confident. He's going to take a massive concentrated position, and he's going to hurt his portfolio. And I've seen him post like trades that he's made where he lost like 50K or whatever. He lost a lot of money on a trade. But it's like, do you really know what he's doing behind the scenes? I don't think anybody does. That's the grift. They always hide what they're doing. So I think it's negligence of the highest order to take your family's money. It's not even your money, it's your family's money. It is negligence of the highest order to take your family's money and just concentrate it in one or two stocks. I think that is a horrible, evil thing to do. Because if you're wrong, your family, their lifetime of savings is cooked. Cooked. And that will create huge problems in your interpersonal relationships with your family if you destroy their portfolios. Don't do that. Well, my parents asked me, you know what I said? Oh, hey, there's a target fund in your retirement account. You should do that. Absolute poetry. Thank you very much. I try. All right, well, that's the saga of Oscar. I had to cover that. Thank you, Dan, for giving me that information. And I think that's it. You guys have a wonderful night. If you want me to answer your comments, you got to do membership. Okay, I'm done. You can troll. If you want to pay membership, you can troll me. But I'm not pulling your comments up unless you're paying me money. So have a wonderful night.